Hey, it's Mack with PriceActionTradingSystem.com, and this is Monday. It's May the 4th. This will be our chart lesson for today. And before I say anything, I'm just going to say this. Most of you are probably aware now, if you traded today, that something changed with the way uh, the CME transmits the data. I don't know if it's just with CQG, but a lot of the traders that follow our stuff do indeed use CQG as their data provider. And they've changed their infrastructure in some way, and it changed the way the ticks are counted. So, 2,000 tick chart is way too large now. It moves far too slow, not nearly enough bars. So, we had to kind of shoot from the hip today and try to figure out what was a reasonable tick chart. The one I'm going to show you here is the one I followed most of the day, is 600. I also opened to 800. Somebody suggested that early on, so I tried that one. I didn't feel like it was enough, and I don't know. I'm hoping it's just the type day, but I'm not real happy with the bars. There's too many. There's just too much overlap, and it may just be the type day we had that caused this. Let me back up a second. It's not the type day that caused the change in the tick charts, but it might be the type of day that we just had all this overlap. So we're going to have to watch this thing for a few days. We're going to have to play around with some different sizes. I'm thinking it's going to be somewhere between 500 and 800 ticks, and I'm leaning towards 500 or 600 at this point. But like I said, I want to see a few days of this, not just one day, and say this is it. So um, the chart I'm going to show you today is what I looked at most of the day, was 600 tick chart. It felt the closest to what we normally see, considering early on. But in the end, I'm not real happy with this chart the way it looks. But I'm hoping that there's a reason that it looks the way it does. I'm hoping that maybe it was just an odd day as well, and that maybe it just was slow and choppy. But we would, because this all looks pretty good over here until we get up in here, and then the rest of the day we spent most of the day. I believe this was a range day for the most part. We had this overshoot here and about an equal overshoot here, and we spent most of the day inside that range of 2109 to about 2112, and that's where 90% of the price action was after the regular open. So it could just be the type of day that, and maybe 600 is the chart we want, but maybe it's not. So we'll just have to see. But I'm gonna back out, and you see the big picture here. What I saw was a spike in channel. We had a quick break, a move up, and then here's the channel moving down the break, a new low. Here's the channel moving up a break, and we tried to make a retest, but we couldn't get through the range high there around 2112. And people ask me that all the time about the short-term trend channels. This is more of a shorter-term channel here, and just remember that sometimes the bigger pattern will overtake it, and like it did here, and that prevents you from getting a new high on the retest before it sells off. But there you can see the little failed second entry long that turns down right off the strong resistance. So that's a great place to go short if it wasn't almost 3 o'clock there. So, but again, we're going to play around with these bars and charts and see what we end up liking. But today I'm going to show you this one because this is pretty much what I got. Um, I deleted my 500 one when I probably shouldn't have, so I could compare them a little closer. But I'm going to put about 3 different charts on tomorrow, and I'm going to let them run for a few days, and then we'll see what we come back with. So, but that's where we stand. So let's start with the first trade, and we'll talk about the trades. There's not a lot of them today. We'll talk about them, and then we'll get through this today. But early on, this is a spiking channel. You really couldn't find the channel. You could draw this line. I originally had it a little steeper, but I don't think that was right. I think this is the correct way. So you really wouldn't have had this trend line early on. Otherwise, you might have been tempted to enter here, but I don't think you'd have had that trend line in place there earlier. Um, in fact, I think you would have had it a lot flatter than that. either a lot steeper or a lot flatter. You might have just been playing off of this one right here. There's your break, a move to a new high, and you wouldn't have had the bigger spike and channel in place. So you probably wouldn't have been. That should have been enough to keep you out of this trade, um, to wait and see what happened. But if you got caught up there, you just took a second entry and you weren't really looking at the big picture, because you see if you move that line, you know, um, it just looks like in the end, even here, it looks like a lot of overlap. But I believe it was a spike in channel, but you couldn't really find that until a little later in the day. And it really, once you got this swing here, then you really could get this one up here and drag it down. And even at first, I was looking at maybe it's down here, and maybe it is down here. But that doesn't account for all these bounces up through here. I really believe this is it. There's your break, a move to a new high, and then it sells off. So, but otherwise, this would have been really tempting here. It's a doji, but it almost closed on its high. But it's not a. It would have been a loser unless you kept your stop. Actually, it would have been even if you used 2 ticks, because it went exactly 2 ticks and then reversed. But I got interested in long when you got this little trap here when it tried to go lower second time and reversed and closed on its high. Just go long right there. That's the first trade of the day. And that's the trade of the day. I mean, you could have ridden this, your runners would have likely been safe, depending on, even if you entered with a stop, you would have survived this by 1 tick, and you could have tried to ride it all the way as far as you could today. And so, pretty good setup, good for runners, the whole 9 yards. And then you had notice your new low. This was really a failed second entry short here, but we had this inside bar before prices broke higher, and so I was a little leery of this one. I didn't mark it. You might could mark this one green because it is a failed second entry short counting from that new low. But I think you were better off to count this as your new low, and then this is a failed second entry. This is like a breakout pullback long as well. And you can count a double bottom either way. And so this is what I treated as the failed second entry short, and that was a nice move up. And it got you to the upper side of this channel, this little short term one. And by that time, then you would have had something to work on this big channel off, and you could have drug this down. But anyway, then it backs up, it bounces, and then it tries to go lower again. And it's almost a repeat pattern, similar to that. It's a little bit different, but it's that little failed break lower, and then it turns. Notice this one went lower and then went out the upper side. I did mark it green because it's right at there at the top, and it ended as a double top, but I think you could have just used a stop there or wait on this one to break higher and then drop your limit order and get a little better entry. Either way, I think it has to be green, just because it's so close to the high of the day. And I didn't show this yet, but you got your first leg, and so you're going to be looking for a measured move similar to that. You can see we missed it by a couple of ticks, but that would have been enough to try to keep you in this a little bit longer. And then you really never got another long entry. This one, it broke higher and then turned down. This one might have been tempting here, but if you saw the breakdown here, and the main thing is to keep you out of this was all that overlap. Look at all those bars overlapping. It's just a little trading range. And then you get your failed second entry long. Same thing that I talked about earlier. It's a double top. You could have treated this as one, but it's right into this where all that support is. So I think you wanted to see if you got another pullback first, which you do. And then you get the, if you count from here, pullback first entry, pullback second entry. Plus, look at all that overlap. It's a failed break higher. And so I like that one for a short. This is kind of similar to here. It's moved too far now, and it's bouncing off the lows. It probably would have worked. There's no problem it would have worked, but you're always better to, your key entry points are going to be the other side up here. So wait for it to, that setup instead of trying to get short right in here. And notice your new low, pull back first entry, pull back, and look at that big bearish reversal bar close on its very low. Go short right there on that second entry short. Quick, easy move, pulls back again, but um, you can't go short below that bar. And by the time you get in here, kind of the same thing before, you're down here right into this little previous area over here. There's a good chance it could bounce on you, and so you just kind of got to wait. It was really tempting to go long here because that's a little trading range and a little failed break lower, but you got to go long right at the high of it, and there's no break of this channel yet. So I think you just got to wait, and you get a big bearish bar there, and that one's really tempting, but that's a first entry. And the EMA is kind of flat, so just wait and see if you don't get your trap, and you do, and your second entry right there. But that's not a very nice bar, and it's real close to these lows again. So if you use this one, you got to use a limit order, and you got to try to get a little better entry. Plus, it's not a great setup because of the signal bar. But notice what happens if you just patient. It breaks lower, pulls back, gives you a big reversal bar. So now you got a failed second entry short, a breakout pullback short, and a big bearish bar. That's where you want to go short, and that's a quick, easy move. Then it starts bouncing. Now you got your break and your new low. Pull back first entry, pull back. That's a failed second entry short right there that reverses. So I like that to go long. I don't like going short there because it's just not a very good setup. If everything's above the EMA, we just had a failed break below this double bottom. There's a good chance we're going to get back in, above that. Then it tries to go lower again and gives you another setup. So if you didn't enter here, you could enter here. And I don't think I would add on there, but you could consider adding on there. But I think I would wait. But if you didn't enter here, I'd probably risk adding on there. And it does work. It pulls back, and now it gives you really count from here. It's testing it. Notice how that resistance is now support, and it tries to trade lower, and it closes almost on its high. Another chance to get long, and it just keeps going. And then you get a push down here, pull back, another push down. And I drew this one green, so there's a trap here. That's a big bearish bar, but we're not back up here yet, so you wouldn't be going short, and it's bouncing right off the trend line. But what I would say here is you got to get in with a limit order, a tick or two back, so you got room to get out. So that would be the only way I would enter that trade, and that's the reason that one's green. If you got in with a limit order, it works, but if you tried to use a stop, you probably get trapped. And you could almost go short right here. The only reason I didn't mark it is there's no break of this yet. And so there's a good chance it pushes back up again and then maybe fails and turns down. And past that, you're in the 2 o'clock hour, so I didn't mark anything else. So that's really all there was today. Not a very interesting day really at all, other than the fact that we're trying to figure out what chart we ought to be trading, and I don't know if I like this chart or not. I'll just be straight up with you. But that's what I saw today based on what we've got. We've noticed we almost had the measured move. We missed it by just a tad. I really thought we would push higher again, but we never could do it. I mean, this is that strong resistance area we're starting to find in here around 2014. I think it moves up to about 2019 is where we got to last time, somewhere in that range. So we're real close to where the really strong resistance keeps coming in and the market sells off. So let's see what happens. Let's play around with the tick charts. I'll continue to watch them, and I'll give you my opinion when I've got one. But at this point, I'm still kind of up in the air about what size tick chart to use. But, things like this happen in trading, and we just have to regroup and experiment a little bit and figure it out. So just be careful in the meantime. And, I'll give you my opinion when I've got one, which I don't have a good one yet. So But I'm going to wrap it up. Nothing much else to talk about today. The next couple of days might be more experimental than anything, just kind of watching some different charts and, you know, maybe not even doing a whole lot of trading. Maybe going to the simulator myself just to try to figure this out. But you can see the patterns are still working. This price action works. It works on any size chart. It works on any market. The thing is, though, it just, the setups just aren't as pretty. There's a lot of dojis and overlaps. And again, it could be just because there's not a lot of volatility today. So I'm not convinced one way or the other that this is not the right size chart. So we'll just have to play it by ear and play it out and see what happens. But again, when I've got some kind of thought on it, I will let you know. But I'm gonna wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.